They say technology makes our lives easier. For work, to learn, to travel, to communicate. But there are things that machines cannot yet do. Things as important as engaging, putting themselves in your shoes, having intuition, or making intelligent decisions. In an increasingly technological world, we need professionals who provide intelligent solutions based on their know-how. Because there are things that technology cannot yet do for you. The human tech.
Good afternoon, everyone. Thank you very much for joining us today on the 5th of February. And we're going to talk about the 720 form. I know a lot of you probably are thinking about relocating to Spain. Some of you already are resident in Spain because this form only applies to residents. Okay, so that means that 2024, you should have been tax resident in Spain. You should be registered as a tax resident, and obviously you need to comply with this specific situation that we're going to share it with you today. Okay, well, basically, I'm going to just say hello if everybody listen. Pedro, can you listen?
Hello, Ignacio. Hello, everyone. I can listen to you very well.
Thank you, Pedro. Michael, can you listen properly?
Perfect.
Yeah, great. Moody from Bay Radio. Hello, Moody.
Hi, good afternoon. Buenas tardes a todos.
Buenas tardes. I'm sure you might have a lot of questions from the listeners from Bay Radio today.
Yes, we've taken a few in, and if unlike last time, you'll probably answer most of them in your individual speeches. But yes, we'll hang on to a few for later.
Okay, perfect. So we're going to start the webinar. I did share with you guys here the article that really covers the worldwide assets declarations for tax residents. And basically, I'm not going to spoil Pedro's speech now, neither Michael, but basically, I will give you a few hints here or recommendations. For those who are more than 183 days in a calendar year in 2024, okay, or for those who were a tax resident and comply with certain specific situation, they must submit 720. Now, 720 has got a very bad reputation because in the old days, you used to have a very high fines and a lot of lawyers who started taking Spain tax office into the European courts and appealing because it was quite aggressive. Now, thank God, obviously, that they removed that high fines, and there are not such a high fine if you don't fulfill the form. Now, the form is divided between three blocks: bank accounts over 50,000 euros, whether it's joint or individual, abroad, not in Spain. Second group, you have for investment, obviously private pensions, and over 50,000 euros. And then with regards to group number three, you've got the property investment, but purchase price in the old days, if it was over 50,000 euros, okay? Obviously, for those who would like to learn more about, I did share with you the article here. And secondly, if you were already tax resident last year or you already submitted and you go over 20,000 euros, all these three categories, you must submit the 720. Or if you cancel any of these products, you should do it obviously as well. So that will start from the 1st of January to the 31st of March. Right, I'm going to pass over to Pedro for him to tell us a little bit more about 720 and his experience. I'm sure that he will tell us a bit about Roth IRA, the IRA for the Americans, which is obviously just a specific for different citizens. And later on, Michael will tell us his experience so far with 720, and Moody will tell us a bit more. And Moody, please feel free to interrupt whenever you think you've got questions or you've got something to say.
Sure.
Okay.
Okay.
I'll pass you over to Pedro and we'll take it on. Over to you, Pedro.
Okay, thank you, Ignacio. I'll try to summarize what you have already said in terms of obviously our experience on the Modelo 720. From the very first beginning, it was like it was a little bit nightmare because obviously the criteria or interpretation on if I had to declare my assets outside of Spain or not. It was a little bit at the beginning, a little bit not totally clear. It was some parts it was absolutely clear. Obviously, there is a threshold of 50,000 euros in 3 pillars, as it's been explained. But there's some many situations, many scenarios, many specific situations where sometimes it was not clear, not even by tax office, even though there is at this time, there is I would say like a clear path in order to properly give some answers if my assets abroad needs to be declared or not. Firstly, Model 720 is not a tax form. It's a tax form, sorry, but you don't pay taxes. It's not to pay taxes. It is to inform about your assets outside. So it is an informative declaration, okay? It's just to inform once you are resident and, well, tax resident in Spain. Let's put an example. You moved to Spain last year and you didn't spend more than 180 days last year. So 2024, even though you became resident, maybe in the second semester of a year, for tax purposes, you are non-tax resident. So do you have to declare your assets abroad as an informative declaration with this Modelo? No, not this year, but you have to do it the following year. Because this year, 2025, you will be tax resident. So it is the first year after you, or the previous year, or after the first year, you are tax resident in Spain. Do I have to do this every year? No, I mean, you have to do this when things may change on the assets that you have declared. Imagine that you declare like one of the pillars is real estate, is properties or rights on properties. And well, in case that you may sell a property, or maybe you, in case that you inherit a property and it is in your name, or inherit it even with a herencia offended, and this is an example, and maybe you have not accepted, expressed that inheritance, but is in some way is going to be accepted, well, you may declare it. And I do it again. I mean, everything that changed during the first time you are tax resident, you will have to inform the tax office about that. If you withdraw or cancel a bank account, if you may change your, for example, a pension plan to SIPP, if the financial institution change, you go to, I don't know, let's put example like Prudential or Aviva, you go to another one, another name. Well, that has to be set to the tax office. At the end, you need to inform properly the tax office. Tax office wants you to inform about those assets in where the pillars altogether are more than 50,000 euros. Well, what if I hold some bank accounts altogether are 60,000 euros, but everything is joined with my spouse, with my husband or wife? Well, you have to declare it anyway. You just say this is the bank account, but some details about each product, and then you show and say that the percentage of the ownership of that product is 50%. As well, if you inherit, for example, a fantastic property outside of Spain, and you just hold 20% or 25% because you, with your brother, sister, you join it as an owner. So this pillars is real estate, in terms of any real estate, which altogether on the acquisition price, when you acquire, when you bought it, or when you inherit it, or it was a gift. At the end, any way of acquiring a property or having a right on that. A question that may arise by people also, we have one of the specialists, Michael, on trust. Trust is in the common law. A trust, what if a trust holds properties and the trustees, or it's a discretional trust, and the trustees, well, have not been said which is the beneficiary of all those properties when the the one who brought the properties into the trust dies? Well, that's a question that is some criteria by tax office, and obviously, but needs to be declared in some way at the end. But there are some questions. There are some questions in terms. Okay, well, so I show it as an inheritance, or I show it like a something that I get it, and then I represent that as an income tax. Well, that's changed a lot about taxes that you may pay, because in Andalusia or in Valencia, for example, taxes on inheritance between parents and children are very, very low at this time, but income tax is different. It's a lot anyway. Okay, this is just an example, but okay, pillars is the real estate. Then we have a bank account, and that at the end, if all together goes more than 50,000 euros, you need to declare it. Even if you have a bank account is 0.1 cent, for example, or even if it's negative as well, any bank account, if all together arises more than 50,000 euros, and then the third pillar is the investments, shares, life insurance. Those who we could say that all of them, probably, or many of them, could be included in terms of those ones that in any case you will have to, or you will be able to withdraw some money or have access to that. Important issue right now. We don't have a big threaten because of the fines. As has been said by Ignacio, this specific law had a big threaten because tax office wants you to inform about your assets, because those assets may be connected on your income. If you have a property abroad, maybe that property is being rented. Maybe that property should be included in the income of that property on renting the property in Spain. Obviously, if you get any income or you are tax resident in Spain, you must declare your worldwide income in Spain if you are obligated to do so because of your minimum income is because you are eligible in order to, because of your income. So it's important to obviously to know if you have to, and you have to obviously do it. You don't have to do it every year, but just in case if something is changed, you need to obviously re-inform and inform every time something changed to the tax office. And it's important that obviously any income you may get in the world, because you have informed and it's linked to your income, obviously you declare it in Spain accordingly to the double taxation treaties. So at the end, and you are getting an interest from an investment fund in the US and Canada or in the United Kingdom. And at the end, those interests may pay because of a convention between Spain and that countries, some part of the interests or dividends in that country and the rest in Spain. But obviously you have already informed tax office that you have those assets abroad, and obviously a tax office may understand that you may get some income. And in the end, if you don't declare it in the tax income declaration, well, something is wrong by the software of tax office. So at the end, important to do it, important to at the end to link it and do it properly. Things obviously by the book. There are many scenarios that I assume that we don't have a specific answer. I would say that we have by sense of common, by comparing some of the rules, we may have an answer. But we are right now on the time is from the 1st of January to 31st of March. If you do it later, if you delay on doing it, obviously maybe a very small fine. And if you haven't done it and you are still a tax resident, even though some years have passed, well, do it. I mean, just a recommendation. At the end, you will do it. I mean, you will get a small fine, but it's better to do it voluntary than the tax office comes to you because they have so that you have some asset abroad. That's all. I think Ignacio just to summarize briefly about Modelo 720 to start.
Okay, that's very good, Pedro. We did try to share with you as well just a brief article to keep you a little bit in the picture about the three blocks and things. I'm going to pass over to Michael to just if he wants to share with us a little bit about his experience, or if he wants to talk about just a few lines about the non-resident, Michael, and then we'll pass on to Muri and questions and answer. Over to you, Michael.
Hi, Ignacio. Good afternoon. Can you hear me okay? Because I'm using a different microphone.
Yeah, very good. Better
Okay.
this time.
Ah, very good. Okay, excellent. So what is it you want me to talk about? The non-resident tax or the 724?
If you just tell them just a few lines, Michael, about when they are non-tax resident and the non-tax resident income tax return for those who were non-taxpayer in 2024. And then we'll cover then, yeah, over to you, Michael.
Okay, so obviously when you're over in Spain, you're either a non-resident for tax purpose or you're a resident for tax purpose. If you're a non-resident for tax purpose and you basically own a property in Spain and maybe a bank account and a car out here, as a non-resident, apart from paying your electricity, water rates, rubbish and community of owners by direct debit once a year, if you're not renting out your property, you've got to file what they call hypothetical income tax return or imputed income tax. Okay, so basically people do get a bit surprised.
I think we lost you, Michael. Yeah, Michael.
Sorry,
we just lost you for a few seconds. Yeah, for internet.
Let me just switch the mobile off. That's it. I'm with you now. Can you hear me now?
Yeah.
Okay, so so basically, if you've got a property in Spain, and even if you don't rent it out, if you're a non-resident and therefore you can't claim it's your main home, the tax man is going to tax you on an imputed income. So basically, what they do is they take your cadastral value. They consider that you've got a taxable base of 1.1% of the cadastral value, or 2%, depending when it was last revised. The cadastral value appears on your rates bill. That's the EB, and then what they do is they tax you at 24.75% of that amount.
Michael,
So
we're losing you a bit. I think it's the internet. Yeah, I think it's a bit. The voice is not very clear now.
No, I think it's. I'll tell you what. If you continue speaking, I'll be back with you in a second with my normal microphone.
Okay. Well, right. Okay. Just
I'll join you in a second again.
Do you need 1 minute?
I just need 1 minute. Yeah, switch over.
These non-professionals messing about with microphones. I don't know. You've got to know what you're doing. Am I loud and clear? Hopefully. I should know.
Right, Moody. I'm sure. I mean, I don't know if you want to say something before Michael joins us back again.
I'll tell you what, I'm not sure if we've covered it or not. I think you might have, but one of the basic questions that we've had through is, where do I do it? Where do I take the form or file it? So just down to basics there. Where do I do it?
I mean,
who needs to see it?
Pedro, correct me if I'm wrong, but I'm pretty sure they cannot do it themselves, or in the old days they couldn't do it themselves. You back, Michael? Yeah, they need to hire an accountant, Moody, or a lawyer to do it and submit it. Okay, but I'm not very sure whether
it would be online though,
Pedro.
Yeah, this specific declaration must be done online, but electronically. Obviously, you have to have the authorization to do it electronically, and that's one of the requirements. I mean,
okay, yeah, let someone who knows what they're doing take care of it. Right?
For sure, they cannot, Pedro. I don't think they could do it themselves because they need to have obviously the digital certificate, and I'm not sure if they change it this year for them to be able to submit it. But it's quite complex, Modelo, you know, Moody. And
yes, I would imagine so.
I would recommend somebody to do it by themselves, because filling it is quite difficult. Then it's not even worth it to make mistakes. It's better for you to do.
Sorry, are you talking about a 724, Ignacio?
Yes, Mike.
It's too complicated for clients to fill in themselves. I reckon, from what I've seen from experience. Yeah.
So, Michael, you were talking about, for those who don't need to make, obviously, for those who are non-tax resident, which means 183 days in a calendar year, what happens, Michael?
Okay, so basically, if you purchased a property in Spain, you're still a non-resident. You've got electricity, water, rates, rubbish, and community of owners that will have been set up by your lawyer to be paid by direct debit. Now, once a year, you've got to actually take some action, and that is you've got to declare the imputed income on that property, even if you haven't rented it out. It's the Form 210. So basically what they do is they take the cadastral value of the property, which you'll be able to find on your rates bill. You'll find it's always quite a lot lower than the market value. And basically the tax man consider that your income is 1.1% of that amount, or 2% of it if it hasn't been revised for many, many years. Your lawyer will tell you. And then you're taxed at 24.75% of that. And you have actually got to present a form. It's not something you can set up by direct debit. You can do it via your solicitor, your accountant, or you can try and do it yourself. What we always say to our clients is that it's probably better if you do have us do it, but if you are going to do it yourself, at least the first year, pay someone like us to do it, and then basically you've got something you can more or less copy moving on to the following year. So at least pay it 1 year, and then try and do it yourself if you really want to after that. But at least the first year, get somebody to do it for you. If you're a non-resident and you do rent out the property, then things are a little bit more complex, and you definitely need someone to do it for you. Because basically what you have to do is they consider that you basically take the days that you really have rented it out. So you rented it out for 100 days. With respect to the days that you've rented it out, you will pay income tax based on the real rentals that you have received. And remember, there are no deductible expenses if you are not a resident in an EU country. So, for example, British. And then what you do is, for the days that you haven't rented it out, you apply the non-resident imputed income tax return, but instead of for the full 365 days, for whatever days you haven't declared rentals on. I don't know if that's clear enough. It's not very complicated, very straightforward if you don't rent it out. If you rent it out, then you really need someone to help you through it for certain. Yeah.
Mm-hmm. Mm-hmm. Right, Moody, you were telling us you were sharing with us some questions.
I have a couple more. Yeah, one I'll come to in
Sure.
just a moment. But the other one, I think Pedro touched on this about your value of your assets. I mean, if someone has a property, if it was less than £50,000, then or €50,000, then it's going to be going back a bit. So it was the time that you bought it and the value at that time, no matter how far back we're talking.
That's exactly it. I mean, if purchase value, so Moody, basically, some of our clients just bought it many years ago, and even though now it's worth £150,000 or dollars or whatever, they bought it for very little. So you're not obliged to submit the 720, but you're obliged, if you sell, to submit all the information to pay tax. So let me just make a few lines here so people understand.
Okay.
720, the whole point for it, obviously, is to disclose the information and for the taxman to know exactly what you're having, and therefore having more information for you to pay tax. But lodging the 720 doesn't necessarily mean paying taxes. For example, you have bank accounts with money that doesn't really generate interest. It's not really going to affect your income tax return. So people sometimes think, well, I'm doing the 720, I'm going to pay tax. Not necessarily, okay? So having a property as well is just disclosing the information, but doesn't necessarily mean that you're going to pay much more tax, okay? Is it clear, Moody?
Yes, yeah, absolutely.
Yeah, and but a lot of clients we're having, and they get confused. So for people to know, 720 from 1st of January to the 31st of March every year when applicable, okay? That's very important. Now, for those who do not comply with that, do not worry. And for those who even are tax resident and, as you said, doesn't reach the €50,000, that doesn't mean that you don't need to pay tax. So be careful here. For example, property worth less than €50,000, second-hand property, you sell it in the future for €200,000. Probably you have a profit net, I don't know, 100,000, 100 and something. That's taxable in Spain. And as Pedro said, with the dual taxation treaty between different countries, you will deduct whatever you've paid in the UK or the United States or wherever you're abroad, and you will pay the difference here, okay? Probably you did not report the 720, but that doesn't not mean that you're not going to end up paying taxes, okay? I think it's clear, but let me know if you need any clarification with that.
No, absolutely. Thank you.
More questions, Moody? More interesting
I mean,
ones.
have you got any from your clients that have joined the webinar, because I give way to those any day, of course. I do have one more, which I can hang on to, or I can give you now.
Yeah, sure. Go ahead. And then we'll start with the big list, and you can start them picking the one.
Sure. This was Colin, who it sounds like he knows a bit about what he's talking about, but how does it work with the Beckham law? Because just remind us what that is. So you're not necessarily resident, you're only paying tax on your salary in Spain.
Right.
So how does the Modelo 720 fit in? Do you have to declare it or not?
Right. Pedro, my understanding is for those who apply for Beckham law, they only need to declare and tax, obviously, their worldwide income from work, but the rest does not need to be reported, doesn't pay wealth tax.
Exactly.
Is that correct, Pedro?
Exactly. I mean, Model 720, in our opinion, with the Beckham law is a special tax regime that you are treated as a non-resident for tax purposes. And at the end, you just pay for your salary, flat fee, which is 24%, up to 600,000 euros. And from then, I think it's 47%. And you are treated as a non-resident. Wealth tax as well as a non-resident. So it's like titularidad real. So you have a property, or then will be treated as wealth tax in case that you live in a special region in Spain where is taxed. And once, because you are fully resident in Spain, even though you got this regime, then in my opinion, the inheritance tax is equivalent to inheritance tax, what's in this case a resident. Even though we have a Supreme Court resolutions in terms of make equivalent situation where resident and non-resident, or in this case is in the region where you live. But Model 720, if you are in a regime, in this special tax regime on Beckham law, is as a non-resident, and in this case, shouldn't be declared.
Okay, so you don't need to, if you're using the Beckham law, basically. No need to declare. Okay.
No need.
Great, thank you.
Now, it's a good question about the Beckham law. I highly recommend people who deal with Beckham law to comply with the requirements and everything very strict, because I'm listening. Well, actually, probably you've listened or heard or read news that there are some cases that there's been a battle between this applicant who did submit it, and now there is a tax inspection because probably it was not done properly, or they didn't qualify good enough. I think Pedro knows about that as well, because for me, I don't know if Michael heard about it, but there is like some law firms trying to sue the tax office for the Beckham law regime or discussion about it. But I don't know if you know a bit more about that, Moody. If you heard.
I've seen it in the Spanish news that we do at Bay. Yeah, it comes up in there.
Okay, right. Let's jump on more questions. Michael, would you like to start with any question? I mean, just specifically, Michael, wealth tax in Andalusia. Good question. Spike is asking questions about wealth tax. Do you want to cover 1 minute for what's going on in Andalusia at the moment?
Well, the wealth tax, they did away with it. But now, obviously, we've got this new solidarity tax if the person has assets above 3 million euro. So there's not more to say than that. So wealth tax, I think in the Valencia region, do you still have wealth tax up there? I think it's still there.
We do have wealth tax. And I'm going to share with you what we are at the moment in the Valencia region. At the moment, I mean, they did promise they were going to remove it, but I don't see that really happening. Here it is. And we in the Valencia region, we are having main property up to 300,000 euros allowance, and then we have 500,000 euros on top. So you could end up having 800,000 euros all in between. And then from there, you have the sliding scale that I did enclose you here in the article I'm sharing with you. That is in our website for you to know. Now, solidarity tax only applies in those communities who do not have wealth tax, okay? So in that, actually, John, in this article, we mentioned when it is applicable. For example, Andalusia, Michael, you have solidarity tax at the moment.
Above the €3 million, yeah. So
Yeah,
it's a married couple, basically €3 million
per
each.
person.
Yeah,
Correct.
per person.
Per
Yeah.
person. Right. Okay, Pedro, would you like to pick the one? We are already having hundreds of questions. And then we could, I don't know if you want to talk the one that Guillermo was talking about, 401k, US pensions.
Okay, let me just check.
Because
Which one?
Guillermo
It's
has
like
joined us as
42.
well.
Okay, yeah. Can you please clarify treatment of 401k, US pension asset from the those ones at 401k, we understand that the tax office understand that is something that you have access in order to withdraw it. So you have access, it's an asset that can be withdrawn. So it's part of something that you have to declare as an asset.
Cash. Yeah.
As cash. It's like you can withdraw them. That is really the key point. More questions.
So Pedro, 401k,
Mhm.
yes, it needs to be declared on 720, correct?
Yeah. I can see
And
there's some. Let me just check.
pensions, Pedro, but when we talk about, well, obviously social security pension or public pensions do not need to be in the 720, except the private pensions that you are able to withdraw, correct?
Exactly.
Okay.
Pensions are obviously you own, or pensions that you may someone wants to pay some money to a pension. Right now, it is young people which is here living in Spain as a resident in Spain, and those ones, in terms maybe reported, maybe have to be reported in case can be withdrawn at some point at the same time. Okay. I now I have to from Angie to declare my properties in Italy. Italian citizen living in Spain, which is the maximum. The question is, which is the maximum value of the properties that have to be declared? Well, is the purchase price when you acquired it, and the cost. We include the taxes, for example, and normally the exchange rate that has to be done in that specific model of 720 is the year that you bought it on the 31st of December. That year, the exchange rate of that currency. From Alex, thank you, Alex. He's a friend of mine, wants to know what are the penalty risks for declaring all assets and bank accounts or making some mistakes. Well, in our experience at this time, Ignacio, interrupt me if I'm wrong, in our law firm, we have not received really penalties from clients, even though sometimes clients came late and it was a delayment. Sometimes there's some mistakes because of the number of the ward or the address or maybe the number, it was not properly done. Well, we have not received any fine, but if it were, it could be, we're talking about a very small fines, but I would say between 150 and 300 euros. Let's say that.
In the old days, Pedro, I, probably you as me, we've seen inspections, not from our clients, from people who never disclose these assets. They were in Jersey or different jurisdiction, and they did share that information with the tax office. They never declare it, and the investigation started. It was the old days. These old days, obviously, are gone for good with regards to penalties. And as Pedro says, nowadays, we haven't seen any aggressive measures. I don't know if Michael in Andalusia has been experiencing so far something.
Yeah, so I haven't seen since the EU told Spain that the fines were too high. They didn't say that the law, that the obligation to declare the 720 was illegal. What they said was the fines were much too high. Since then, I haven't actually seen any procedure to fine people. Doesn't mean they don't exist, but I just haven't seen one.
That's right.
So I don't know. The other thing is, what I'm not sure about is, what is the maximum fine at the moment? Do we know what it is legally? Because since that EU told Spain, because we know in the right at the beginning, the fines that the EU was saying were too high, could have ended up actually being 100% of the amounts that you hadn't disclosed, which is a bit crazy. So we know that that's not allowed, and that's the thing. But what is the maximum fine now? Do we know?
I think we're talking about, Pedro, it's pretty much like income tax return for submitting late, correct? So we're talking about 150 euros
Yeah, it could be like that.
block.
It could be increased in some way more, but let's say
Michael,
between
it couldn't
150
go
and
higher
yeah.
than income tax return, which is obvious. I mean,
Okay.
because if you submit late, as you know, the income tax return, you know you have a 75 euros for non-residents, probably something like that with the reduction. So it's not different of the income tax return. So it's nothing major as it used to be in the old days. You
Okay.
know?
Yeah. Okay.
But I will ask
Okay.
Guillermo if he knows exact figures. Guille, do you know the figures here for the fines? If you could share it here with us
Yeah,
specifically.
I mean, I would be interesting if there's any lawyers watching, and we know we know that there are sometimes lawyers hiding away, lurching in the background. If there are anyone there, I'd really be interested to hear from someone that's had a client, whether anyone has actually received a fine since the EU told Spain off about the fines before. I'm really interested to hear. If they have, what the fines were, what the sort of what actually happened.
Interesting, yeah.
No, yeah. Sorry, I interrupted you there.
And I wonder as
Okay.
well, Michael, for those who had inspections, what happened because they were in between? And I'm sure I was wondering for those who have since for inspection from the tax office with this new law, where did it end up with? Because we were talking about a lot of money. So
yeah, I don't know, because as I say, when before the EU judgment on all this, I heard a couple of from other lawyers of cases that had been really, really bad against people, but I don't know what actually happened with those people after these rulings. No.
Okay. Right.
Okay. Let's
okay.
go to, I mean, we have answered some more questions. In this is said by Dan. Is the model 720 required to be submitted per person or per family household was per person? Is it individually? You need to say this is the asset that I own and what is the percentage, 100% or 50% or whatever. But the applications are individually. By Jill, it says how securities when IBAN numbers are declared, these numbers kept securely. We are generally advised never to give out like account details. Well, that's a very good question. Not just because of Model 720, because in general about bank accounts, and we have seen experiences from, well, basically from all the law firms and agents and people who have moved some money, and that obviously the bank accounts and the security on this is a must. Obviously, giving these numbers to tax office, I understand it's absolutely secured. It's something that tax office has a very powerful computer and secured information. Well, you never know, but obviously something that is very secured on tax office information, and obviously the law firm that you bring these details and with this confidentiality and with secured plan in the software. But we have had some experience that obviously some people have been informed by some fake emails about to transfer some money. So keep your eyes open in order to check perfectly what you do or what you say about your bank details and where you transfer the money. Okay. What happens if I move my money from one foreign investment institutions to another? Well, that's a good question. If for Model 720 perspective, obviously you need to inform about changing about this investment fund or product on to another one, but may arise an issue about the tax return. Maybe where you withdraw that investment fund, it is not just changing between pensions, for example, or between, well, maybe withdraw and you get some profit, and maybe that needs to be declared in tax return, that money that you get, and then you invest where you also declared your Model 720. So before you do that, first check what are the consequences on moving or canceling or changing that foreign investment institution to another one. Okay, if it's a pension, it shouldn't be any problem. But if it's a different kind of product, should be a problem on income. What else, Ignacio or Moody? There's any question you would like to say?
I don't at the moment. No, I'm just listening. We're all learning a little bit.
Okay. Right. I think we've got another question, Pedro. I don't know if you cover. Is there 100 direct correlation between assets on the Form 720 declaration and the assets included for wealth tax consideration? Do you talk about these, Pedro? Do you cover? Because at the end of the day, this is just an informative declaration, and that gives enough tools for the tax office to sharing between them. However, wealth tax, it belongs to communities, autonomous regions in Spain. 720 is for Madrid IAD, right? So it's tax office, right? Obviously, yes, they could share it. And at the end of the day, the whole point for the declaration is for you to disclose the information and to pay tax, okay? I did share with you as well, Michael, here, even though it's in Spanish, what the law states about the fines, which I know is difficult to interpret, but we're not talking about a lot of money here. And but the bottom line, if you did not create damage to the taxman, for example, we've got some cases, Michael, that people forgot to do the 720 and they come to us to do the income tax return. And then probably we submit it late, okay, because they didn't do it on time. When, especially, Michael, when you sell properties abroad, it is very important on the 720 to report it, and then on the income tax return with that information that you have already submitted, share it on the income tax return so everything clicks, okay? But yes, some people just forget about it, and in general, the time where they open for you to do it is from the 1st of January to the 31st of December. If you do it late, obviously a red flag is going to just show in their computers for sure because you're late, okay? So, but if you're late, then there is a different type of fine, but it's 50% of what are the 20 euros per data that I share with you, Michael, here. Of the mistake, right? So we're not talking about nothing like in the old days, okay? But still is quite important for them to discuss it with their tax advisor or their lawyer about any move you make, any step you make, just be advised. That will be my yeah, Michael, yeah.
Ignacio, I've got a question for you. Somebody's asking me, they declared on the income tax return a capital gains tax loss. Okay, well, sorry, they should have declared a loss and they simply didn't. As they made their income tax return in Spain, they'd sold an apartment back in London and they'd lost money. They didn't bother to declare it on their income tax return, and now they're going to sell something else at a gain. And so what they realized is, because when they declared it, they just thought, well, we've lost money anyway, we're not cheating the tax man out of anything thing. But now, of course, they want to compensate the loss with the gain on their tax return, and they're wondering, can they rectify in any way the tax return that they presented wrong 2 years ago?
Yeah, you could update them. Obviously, you're going to have a fine for late submission, okay, of that data, which we're not talking about a lot of money. From the top of my head, I think it was 75 euros. It is quite important to discuss it with their accountant to know whether it's worth it. Because, for example, the problem with the 720, Michael, is that you're leaving a track. You're leaving a lot of information. Yeah. So if they included in the 720 that information and they didn't update their income tax return, for the taxman, they still have that property. So sometimes you're in catch-22 situation. What do? You didn't.
Yeah. So in their case, basically, I mean, I'm just simplifying, but basically, they sold losing 30,000 euro when they sold that flat in London, and now they're going to sell another one in which they're going to make a gain of 30,000 euro, and they've suddenly realised that they're not declaring the thing. Yes, they didn't have any tax to pay, but they've realised that they could do now with been able to compensate that loss from before with the gain now. If they present a rectification or whatever, do they need a digital signature to do that, or can their accountant just go ahead and do it? Or
their accountant could do it and re-lodge their income tax return. Obviously, you're telling the machine that you're late, and you're going to get a letter automatically for late submission or wrong. Obviously, you're not going to get a fine because you don't have an inspection. but you're going to get like a surcharge for late submission.
But what do they present? Like, because they did present the income tax return. It's just that the part of the capital gains tax they just ignored it and didn't put anything.
So it will
in
be
there.
complementaria, right? I don't know what Guillermo thinks about complementaria. Guille, ¿estás ahí? ¿Nos oyes? I don't know if he's listening. He's gone.
Anyway.
Right. I think the question complementaria, I think están sujetos a wealth tax. Yeah.
Rectificación, maybe, you know.
Yeah, una rectificación, but I don't know if he's listening. Pedro, I don't know, rectificación, if you already have to rectify the existing income tax return and whether you get, I think you'll get something. Michael, you always get something.
Yeah, at the end, you need to amend it, make a complementary, and then apply for anything that should be compensated or payback, or yeah. It takes time.
Do they need a digital signature to do that or not? Do they need one?
Do they need sorry what?
Do they need a digital signature to be able to present themselves the clarification or not?
I mean, that thing I think is compulsory in terms of you instruct some gestoria or lawyer. They could do it. Yeah, they could do it to the tax office and prepare a form and do it there and just sign it and stamp it there, stamp it. But yeah.
Oh, I see. They can still do it that way. Can they still go to the tax? You go to the tax office and present something in paper.
Yeah, I mean, it's all days. It's like all day, but we recommend to do with some gestoria or lawyer in order to do with the digital certification.
Michael, Guillermo is just writing here. Probably he cannot talk. He said the fines were 150 euros. What you call it, rectification. Right. There is no damage, but you have this kind of surcharge or whatever you want to call it.
Late presentation. Yeah.
Katrina is asking whether we could do these around Spain. Well, yes, we're doing the 720 for clients all around Spain. We could do it through a video conference. We send all the forms to you. You fulfill it. We have an appointment. And then depending on complexity, we might have 1, 2, 3, whatever appointments we have. So it's not a problem to do video conference in the future if you need to have discussion about 720. Okay, Pedro, where are you at? Because you cover
let me just.
the Roth IRA, the 401k. Have you talk about all that American retirement accounts?
Yeah, let me just go rapid. I mean, from Daniel, we bought a property in 2010, and then city tax value. What is the amount if we sell it? Well, if it's before the Model 17 law, that do not have to be declared in that terms. And if we sell, it will be an income tax declaration. Obviously, it will be a capital gains tax about the buying price plus any cost minus selling price minus the buying price. Will not be the city tax value in this case. Okay. And for a married couple, do both people need to be named on the deeds of the property for each of them to qualify for the 300,000 euros primary home allowance? Well, this is no more than 720. This is regarding wealth tax. Obviously, if 2 of them are on the deed, 2 of them will be able to get a benefit of 300,000 euros. But if it's just one of them, if the marriage agreement by a prenuptial agreement or any agreement, or the supplementary law on the country where he's been living, or the applicable law in the country where you married, says that the marriage is a separation of assets, then if it's in the name of one of you, it will be just one of you will be reducing this benefit of 300,000 euros, not both of you. And if it's a community of owners and the property is just owned by one of you, it means that the property is owned by both of you, even though it's in the name of one of you. So both of you will be able to get this benefit and reduce the threshold. Okay.
Right.
And
good.
What else?
Donna is asking an interesting question because for people need to have simple facts. I mean, last year, was I tax resident in Spain? That's the question. 720 only applies for tax resident in Spain. Now, how about if you become non-taxpayer in that year? That means that the following year, you don't need to do neither the income tax return as a resident, neither the 720, neither the wealth tax, you will only need to do, as Michael stated, non-resident tax only if you have property in Spain, or depending on the dual taxation treaty between your home country and Spain, some countries will still include money in the bank as well. Obviously not the case with the UK, the US, and many countries, but there are some that in the treaty. So it's important for them to check what that country are they from to have that question. Right, Pedro, more questions we have because we're running out of time. Then I think it's important to make clear here about the unfortunately they are subject to wealth tax here. The Roth IRA, the IRA, the 401k, and they're subject to wealth tax. Okay, unfortunately, a non-European country has this aggravation. We disagree, but it is what it is at the moment. And is, as Michael was talking about, non-resident tax for non-European countries is different. For example, capital gain tax, if you sell a property being non-European or European, is exactly the same, 19% on the net profit. However, renting out a property as a non-European, non-resident, then we are, well, in this case, subject to 24%, and unfortunately from the gross amount, not from the net. Okay, there's still some incongruences that I'm sure eventually, because of the appeals that are being lodged through the tax office in the European Union, that will disappear eventually, because that shouldn't be different between European and non-European. But here we go. That's where we are.
Okay.
Okay.
There is a
Pedro,
very
any more
interesting
questions?
question. There is a very interesting question that's made by Donna. It says, if I move to Spain in July 2025 this year, but I leave Spain before the end of June this year, so it means in this basically that it's going to be less than 183 days in each calendar tax year, would I have to submit Form 720? Well, the answer is we are entering really in a gray area. But first question I need to say, I mean, just because saying that, it doesn't mean that you are tax resident or non-tax resident. It means in a general criteria, well, you are less than 183 days. But you must fulfill the requirements on a country that you are tax resident in that country, that you pay taxes in that country, that you at the end are resident in that country. So in that case, well, it means that, well, you've been in Spain less than 180 days, that's perfect. So if in the other country you are eligible because you are resident, because you are tax resident, and you have a tax certification that shows and proves that you are tax resident, perfect. In example, in July, well, if you are not tax resident, so nothing to do with Modelo 720, not in 2025, not in 2026. But imagine that you say, well, I'm going to be less than 183 days, but I have a property in Spain and I don't have a property any available in any other country, and I stay then a couple of months in 1 month in France, 1 month in Italy. I visit my friends in the United States for 2 or 3 months. Well, you will be eligible to be tax resident. In the end, you have to be tax resident somewhere, and you have to prove that you are resident and tax resident in Spain. Even if you stay less than 183 days in Spain, if you do not fulfill the requirements to be tax resident somewhere, and you pay taxes somewhere, then you will be in Spain. Sporadic absence are treated like if it counted like if you were in this case in Spain. So important tax certification that you are tax resident somewhere. I mean, you don't have to bring it to the tax office. You have to. We recommend clients always to get it, in case that in 2 or 3 years you are inspected and you have to prove that you in that year, 3 years before, 2 years before, you were fully tax resident somewhere and you pay your taxes and you were fully resident in that time. And what about proof when you say, I was not resident in Spain? Well, bank statements where you've been in Spain or any bank statement you may have in the world, electric bills in the property or the place that you've been rented, water bills, or even to track your mobile phone. Sometimes it was in the past. Now it's not as easy like that. and to see where you are. I mean, at the end, any kind of proof that you may be applied. I mean, because tax office will be at the end in some way thinking that you were really resident and you were avoiding that. Important. You have to prove you are resident and at the end tax resident somewhere. If you have properties in both countries, then will be the place that you have your economic, maybe family, vital. We call it centro vital, centro económico. Where is your? I mean, if you live in the UK and at the end and in Spain you just have a property, well, and your family is there, your financial is there, your work, your employment is there. I mean, obviously that attracts you into UK with a tax certification that says you are tax resident in the UK, for example. But this is a gray area, and I want people to be fully advised when you start thinking about I'm going to be in 180 days in Spain and the rest some other country or some other countries. What happens with that?
Pedro, let me just tell people here is very important for people to do tax planning. You know, it will always be cheaper for you to do tax planning simulation. What will be the tax scenario with this information as a resident, as a non-tax resident, from a wealth tax point of view, from an income tax point of view, because at the end of the day, we have full control of what we want to do in the future or the presently, you know? So how about if I relocate myself into Spain? When do I relocate? How many days? What will be the tax scenario? What happens if I sell my property after I'm 2 years already in Spain? So all these questions could be asked previously and save thousands of euros. And we're happy when this happens because they really save a lot of money. And unfortunately, when this didn't happen, it's very sad to see people that they didn't seek proper advice at the time, and they are just down into a big problem or a whole bunch of money to pay. Okay, so one of the advice, seek advice, especially relocating or talking about taxes and money, is always worth it. Okay, Michael, you wanted to say something?
No, I think that's great advice. I mean, so, you know, people have to think about, there's the income tax, there's the wealth tax, there's the inheritance tax, very important, capital gains tax. There's all sorts of implications when you start buying and selling properties in different countries that really need to be looked into.
And very important as well, what Pedro stated about proving and doing your, before you even have a court case or investigation, try to have paperwork always in place, at least for 4 past years, because it is a paperwork trial, a battle between the tax office, because unfortunately they will ask questions and you'll have to submit paper, and they could go backwards 4 years. And even though you're right, if you don't have the right papers, like Pedro said, oh no, we were out of the country. Okay, because we had inspections with these pilots. Show me that you've been out of the country. Okay, show me that you were a tax resident in a different country. If you're in a country where is a tax paradise, basically, there is a presumption you're not paying taxes. So it's very delicate, and I think it's worth doing all this kind of homework, which it will always be cheaper than going through the problems. And we tell you because we have been through all these experiences in the past with clients, and better safe than sorry. Okay, Muri, do you have any questions from Bay Radio yet? Or
nothing really, not that hasn't been covered by yourselves, really. I think we've covered just about everything. There was just one that somebody, this probably won't mean anything to you or Pedro, but somebody that's watching now is saying, are we sure that Michael Davies isn't really the great Michael Sheen in a new role? Now, he'll have heard that before. You'll have had that before, I'm sure.
But
striking similarity. He could carry that off, I'm sure, as playing a lawyer.
Okay, yes, Michael, can you please share your email to know the real Michael Davies, where he is?
Yeah, we believe you. I believe
your website. Muri, if you could share your website as well, where they could listen, and hopefully, sure. I don't know if you'll be interviewing.
Put it in the chat, yeah?
Yeah, in the chat. Pedro, could you please put your email address in case they do want to do a video conference with you guys? And obviously, we are running out of time. I will say thank you for your time, guys. Thank you, Michael, Muri, Pedro, and the audience, obviously. I
Thank you.
hope
We'll see you
this
next week.
information is
Thank you.
helpful. Be safe and see you very soon in our webinars. Over to you, Juanfran.
Trust is vital when you're in another country. If you want to buy a home, set up business relationships, or apply for a residence permit, you need to be able to count on the best independent legal aid. Pellicer and Heredia is an international firm of lawyers with over 20 years' experience and one single aim: for you to live at ease in Spain. In order to give you a clear, streamlined, and fast response, we work with a cross-disciplinary team of professionals specializing in the main legal fields: civil law, foreigners' affairs, business law, tax and financial law, and international law. And to ensure that you're kept informed and up to date with everything, we have 6 offices on the Eastern Coast. Whether you're from here or abroad, we will always stand by you and speak your language. Our relationship is based on openness, professionalism, and a commitment to finding legal solutions in your best interests and for your peace of mind. Pellicer and Heredia, international lawyers.